So today we're going to talk about the stock market in the last 24 hours because it's been a bit of a crazy stock market. It's been a frustrating stock market. It's been a painful stock market. The last 24 hours have been strange because yesterday we had a big slump in the S&P 500 and then there was a big recovery in the S&P 500 and it actually finished positive. But for me personally, yesterday was a day where I underperformed the stock market and massively underperformed it. It was a day where I looked at so many stocks and I went, that doesn't make sense. And it's been a while since we've done back-to-back videos where I've got to remind people like it's all about the long-term investing game plan. And even though today is going to be a little bit of ranting and raving about the last 24 hours, it's important to remember that this is all opportunities for the long term because realistically, we're not really bothered about the day-to-day movements. We're bothered about where these stocks are going to be in 2, 3, 4, 5 years' time. And if we go back to 2022, there was time periods during that dip where there were stupid moves being made. And right now, there's a few stupid moves being made in the stock market. I don't think the market is massively undervalued, but there's certainly opportunities out there right now because of the dip that we were on. We've seen the dip in the stock market, and that has pushed some stocks to an opportunity level. And I've got to remember, yesterday I was on my account looking at it, and, I was looking at day-to-day moves, and really, as a long-term investor, do I need to look at day-to-day moves? Not really. But you do, don't you? And yesterday was one of those where I was looking at the market and going, this is stupid, some of these moves that are going on. And today I'm going to point some of those out to you. There's going to be a lot of stocks in today's video. And these are just some stocks that I think that there were some stupid moves yesterday. And I certainly think they're interesting opportunities. So first of all, the day yesterday, 8 a.m., it set the tone for the day. The first stupid move that I saw yesterday where I went, that doesn't make sense. And I'm going to do a full video on Game Realms on the Patreon for you guys as well on the earnings. So I'll try to get that out for you guys in the next couple of hours. So check that out if you're on the Patreon, and if you do want to see it, links in the description. But first one was Game Realms. Yesterday, the stock basically ended up being up 1% after their earnings. And then it brought out their earnings at 8 a.m. and they were incredible. Revenue was up 22%, and EBITDA was up 30%, profit before tax was up 61%. That's insane. Not only double-digit revenue growth, but revenue growth in the 20% range. EBITDA up for, when you have profit growing more than revenue as well, that's crazy. And profit before tax up 61%. I'm thinking, okay, in the last year, the stock has realistically not moved that much. If you're growing profit at 30%, there's going to be a major jump on that number, that earnings report coming out. And it was up 1%. And it just didn't make sense. 1% for these numbers. For a company that just reported 22% revenue growth and adjusted EBITDA up by 30%, and the stock went up by 1%. And it's not like the stock's overvalued either. This stock is currently, Google's wrong because it's not got the current numbers in. It's showing 16 times earnings, even though they've just done their full year accounts at 12 times earnings. So realistically, this is now at 12 times earnings. And next year is to go down to 10 times earnings. A 10 times forward earnings business that is growing at 20% a year with profit growing at those levels, it shouldn't happen. And this stock should, in my opinion, yesterday, Game Realms was already megally undervalued. And with the numbers coming out and they're hitting the numbers, the stock, in my opinion, should have been up 20+%. And it just did not make sense. So my first frustration in the start of yesterday morning was when this brought out the full year results. I was thinking this stock's going to be up over 20%. And it was up 1%. It just didn't make sense at all. Looking at it, all the analyst upgrades came out as well. The price target here from Cancord got lifted from 50p to 57p after another record year. 57p, we're going, there's mega upside there from those sort of levels. And analysts are 12 months ahead. They're thinking 12 months is going to be 57p. That's mega upside for 12 months. And like I said, I think the share price should be double. I think the upside I'm seeing from here is 200+%, which is crazy. One article that I did see out there, which just didn't make any sense, was this one here from iGamingBusiness.com. And it says, Gaming Realms cautious of incoming slot stake limit impacts post-mix UK earnings. What mix UK earnings? I was looking at their earnings and I was thinking, they've just done 22% revenue growth. EBITDA was up by 30%. Profit before tax was up 61%. If you look at the outlook, they said, the board is confident in the group's strategy and expectations for the rest of the current year. And it was hold on. The board came out and said, we've had a good start to the year and we're really confident in our guidance. And they came out with these cautious and mixed earnings. It's absolutely crazy sometimes, some media reports out there. I'm thinking these guys do this as a full-time job. I'm here in my spare office after doing my full-time job, and I can look at this and go, what a load of crap that is. It does make me laugh sometimes, some of the articles that you see out here. So yeah, igamingbusiness.com, you've had a stinker there. But S&P overall, big recovery went on during the day. I thought that would lift a lot of my stocks out into a bit of a rally, and for one of them it did. Hims and Hers actually did okay. That did really. What was down, I was very close to pulling the trigger at this point in the when the stock market opened up, and then it had a big rally out, and this was one of the stocks that actually did respond to the rally in the S&P 500 in my account, which was frustrating because I was actually quite close to buying, and it's probably the one that I want to actually go a little bit lower into that $25, $27 range, and then I can start adding a bit more shares in. So I was a bit like, okay, that was a little bit frustrating, but then after that, like, some of my other larger positions, they all sunk, and that's what ended up me having an underperforming day. And MercadoLibre down 4.7%, which is obviously one of my fifth largest position, which was like, wow, I don't know why that's down. I'm not complaining though, because this is once again one that I want a little bit lower before I do go buy some more shares. So this one can go down a little bit, to be fair. I think sometimes the issue that people don't, with MercadoLibre, I think people don't actually realize how cheap it is. So right now it's 51 times earnings. You've got your net income growing at 287%, revenue growing at 37%. It's absolute premium of a premium business out here. And realistically, it's on a forward P of around about 41. But what people don't actually realise is because MercadoLibre beat so much on their earnings, because they don't guide and then they absolutely smash it. If you look at the last earnings, for example, the EPS beat was a beat by $5. When you're beating by $5, that EPS is coming down rapidly. So, the forward P is coming down rapidly. So, at 41 times earnings, if they do the beats they have normally done, realistically, it's probably 37, 38 forward times earnings. So, that's what 37, 38 forward times earnings is actually pretty good in my opinion, for a growth company doing these numbers. I normally like to get MercadoLibre though on 20% dips. And when we look at MercadoLibre right now, the stock is currently on a 10% dip. So yeah, I'd like it to go a little bit lower. I think the last time I bought was during this dip here, which you can see here, pushed it down to 20%, and that put it down to a forward P of 37, but with the big mega beats I normally do probably 32-ish. I really like those sort of levels. So yeah, once again, that had a bit of a big drop day, which I don't mind because I want to buy a little bit cheaper, but I don't know why, because if the market's rallying, I'm surprised this didn't rally, because this is one of the best stocks on the stock market, but it is what it is. Another stock that dropped down quite a bit was DraftKings. Same again, that was down megally underperforming, and as my second largest position, that's probably one of the core reasons why he underperformed. But yeah, for these guys as well, the recent numbers have been amazing. The valuation looks cheap on it. I don't know why this one wasn't rallying up with the market, to be fair. JD Sports, this is coming a larger position in my portfolio. And same again, yesterday, I think JD Sports was down 5% by the time it closed. And I think it's having a bit of a bounce up today, to be fair. Well, I say a bit of a bounce up, 0.65%. And same again, I was looking at JD Sports and I was thinking, looking at some of these companies in this retail space that brought earnings out recently, and, how much they're crashing. And these guys are still doing, really pretty good earnings. And, you're now into the five forward times earnings for this business. It just doesn't make sense why this stock continues to go lower. I just don't know how this stock can continue to go lower. You look at the valuation and the numbers they're doing compared to some of the other stocks in this space. I mean, if we can just go back on Stockopedia. And by the way, if you join Stockopedia with the link in the description, it gives you 20% off, I think I'm going to say. But, you look at the recent earnings and, they've just gone from 10.5 billion up to 11.3 billion or 11.4 billion. You look at the EPS, let's go on the net income. Net income's just gone from 539 up to 642 million, which is, P down at what will be a 5.5 times earnings. Why is this so low? Because you're looking at other companies out here, and I don't know which company to kind of compare to. Maybe we compare to someone like a Foot Locker is always the one that I like to compare to, because they're very similar stocks, businesses. And, this is that's 2026 numbers. 15 times earnings, or on forward basis, 9 times earnings. How's JD Sports valued lower than Foot Locker? And, you look at their profitability levels and they're absolutely sunk, and revenue-wise, the revenue's declining. It just doesn't make sense. And how can this continue to go lower? I was looking at one like Evolution. To be fair, it's had a bit of a rally since this morning. But this morning, the stock opened up 4% down. And I was thinking, they've released some financials, because why has this gone 4% down? Because it doesn't make sense. You're looking here like it's 11 times earnings and 4.3% dividend yield. And I was like, why is this going 4% lower? And I think they've reported some earnings in the earnings a week, and it wasn't. The stock just pushed it lower. It's like, how's this one going lower as well? It's crazy. I was saying, like, overall, I don't think the stock market is, as a whole, the S&P is like attractive levels right now. But there's certainly individual stocks that are. Like, I'm looking at Game Realms, and I don't know how that was up double digits yesterday after those earnings. I'm looking at MercadoLibre, and I'm thinking, well, on a green day, why is this not up more? It's not like it's a crazy valuation. Why is something like Evolution dropping another 4% at the levels that this one's currently at? DraftKings, why is this one dropping so much compared to the market? JD Sports, how's this 5 times forward earnings? There's some big opportunities here. And, like I said, it's important not to get stuck into the day-to-day movements, because day-to-day movements, you can get frustrated. You can get frustrated and shout at the stocks. And don't get me wrong, there's part of me yesterday that even I was doing that. I was logging on to my account, I was seeing some of these share prices, and I was like, why are they going down so much? But you've got to remember, in these opportunities, these are sometimes the best stocks that where the stock market's massively mispricing them. Those are sometimes the best opportunities where you're going to make the money in the next 2-5 years. Example was Hims and Hers. I remember Hims and Hers when I was buying the stock in that $3 range, and it was there for like a year, and in that time we saw Hims and Hers bring out mega earnings. Mega earnings where they were beating EPS, the revenue was raising, and it was like, why is this stock going down? It doesn't make sense. And then eventually, I had to stick through a year of pain, maybe even a bit longer than a year of pain. And then eventually we got the rewards, and now we're up massively on that position. And that's even with that one having a mega drop. So you just got to sit on them really, and it can be frustrating. That's why you've always got to take the long-term approach, because, the point of the long-term approach is that you get to take you get to take the rewards of these mispricings. And you don't have to worry about the day-to-day movements. If the market wants to send it down another 10% lower, then you make more money on it. I think that's what you should be looking at. Funny enough, Pets at Home, another one that may be creeping down to attractive levels. 11 times earnings. That had a bit of a drop yesterday off another update. 6% dividend yield. Personally, for me, I went for CVS Group over Pets at Home, and I made a bit of short-term profit, and I moved out of it. Pets at Home could certainly be one that I'm interested in with the drop that they had yesterday. The only thing that makes me nervous about Pets at Home is that I already have quite a few retail stocks, like JD Sports, B&M, Card Factory. So I don't want to have too much retail in here, but it's certainly an interesting one. But obviously I went for CVS Group, and we made some money off it. But if Pets Home goes to the right levels, maybe I'm forced to get into it. I mean, they brought an update out, and I think they were hit by the profit underneath it. And I still don't know how the current government are sitting there after their budget in August and seeing all these NI increases and these big increases in wages and go, yeah, we made the right decision. Like, how many times have they seen all these profit warnings come out from businesses and think, yeah, we're okay to keep going ahead with it? Like, surely at some point they need to adjust and go, yeah, this is concerning, because you're going to push everyone into recession, the job losses that are going to be out there. It's just, and then they're wondering why they've only got 1% GDP growth instead of 2% in like last week. Like, this is why, guys. Like, sort it out. YouGov actually brought out their earnings the other day, and that had a bit of a drop. I've not actually looked at these results yet, so I can't give you any opinion on it. But I will have a look at some point when I have a few minutes and see what's going on there. I don't know if I'll do it on YouTube or Patreon, to be honest with you. But looking at their results, I mean, they had a pretty significant drop, and today it looks like there's a bit of a rally going on. And to be fair, from what I scanned on the headline numbers, the numbers looked okay. Like, they're not amazing. Obviously, there's issues going on, but how much of that is priced into the stock? Look at the share price. A lot of that's priced in, isn't it? And they basically came out, they hit the numbers, they hit the numbers that they said they were going to do. And they're saying it's not getting any worse, which is a positive after, what's going on right now. And I looked at the drop yesterday and I thought, that didn't really make much sense if it's not getting worse, in all of that kind of priced in. And it looks like, yeah, maybe the market mispriced it yesterday, and there's that little bit of rally going on. I've got to really look at YouGov, because obviously I'm down quite a significant amount on this one, to be fair. It went from like the premium software company in the UK, and now it's absolutely in the dumps. But if they're going to hit their full year numbers, and they do show that sign of recovery, obviously revenue growth has been okay, but if they are going to get that profit back up to levels that they were kind of at, and this does go down to 8%, and then they're growing, I'd say anywhere between 5 to 10% a year, and you valued it like 6 times earnings. If they do those numbers, very quickly the share price can rebound if they start hitting those numbers. That's the big question. Now they're going to start hitting the numbers. Obviously it's got valued from a premium software company to a company that can't meet the numbers, and then if they do start meeting the numbers, then this will start rolling up. So yeah, I've got to have a pretty good think on YouGov, because I've got to see confidence. I've got to see confidence that they are going to hit these numbers. That's what I've got to see, and if I do see that confidence, then I'll buy into it. But yeah, I'll have a better idea when I see the full year accounts. And if the last update didn't show that confidence to me, and that's why I didn't buy it. But hopefully this update has that kind of confidence of like, yeah, we're going to hit those numbers, and then we'll see where we're at with the YouGov position anyway. So yeah, that's the video for today, guys. Just a lot of stock talk in general, pointing out some stocks that I think are good opportunities, pointing out stock moves that don't make sense, but also trying to remind you guys, hey, look, we're not here for the day-to-day movements. In the long term, we will. If you buy stocks at good valuations and they hit the financials, you get the rewards. And also, just a reminder, we've been through this before, guys. We went through, that 2022 stock market, which was tough. We saw plenty of stocks then where they smashed the financials and yet they didn't get rewarded. But eventually they did. And the same again here. I'm looking at some of these stocks, I'm looking at Game Realms. I'm looking at MercadoLibre. Maybe not as much with MercadoLibre because that's still there. It's still up quite a fair amount. The likes of Evolution, DraftKings, JD Sports. I'm looking at these earnings and I'm thinking, you know what? There might be one in here that is wrong, and maybe the stock price was correct to value the stock so low. But in my opinion, I'd say like a good three or four out of it. Three out of four of these stocks are gonna eventually be priced at what it should be, because some of these don't make sense, and that's the game of patience that we have. And sometimes it's like a light switch. You don't know when that rally is going to come, but eventually, all of a sudden, it only takes a little bit of momentum and everyone kind of jumps in and then the stock rallies up. We've seen that many times before where stocks are sunk down for ages and all of a sudden you kind of have that, absolute slingshot out of the dumps. You saw it with likes of SoFi. I mean, how long did we sit on SoFi for? And it, a year and a half, and the stock smashed it and it just didn't get rewarded. Then all of a sudden, everyone piled into the stock and then boom, you're up huge on that time frame. So it's just like waiting for that whenever that is going to happen. And it can be in a month. And then boom, all of a sudden you're looking like, bloody hell. Air South Africa is another one recently. You look and you're like, bloody hell, I'm up 50%. When did that come from in a month? I nearly forgot it. I was actually going to mention Celsius. I mean, this has come back to life in the last month. Look at this one, up nearly 40% in the last month while the market's having a bit of a tumble. It's an interesting one because obviously, there's a lot of positivity coming around at the moment. I think there was a few upgrades yesterday. I'm trying to find the actual upgrade now, but I can't actually find it because of the acquisition they made. Celsius is actually a really interesting one right now because I actually don't know where I'm going with Celsius, because I feel like the actual business itself isn't performing that well, and I'd actually consider like cutting it now from a portfolio because I don't think the Celsius brand's doing that well. But the acquisition they made is made it so interesting about where it goes, because that's actually the article that I was looking for. Because of its new acquisition, because of its entering the new market, how well is that going to do for it? And I'm in a really tough decision now because I'm actually really concerned on the Celsius brand, but the acquisition looks really interesting and could be a major driver for them for the next few years. I don't actually know where to go, but it's interesting going with what's going on with Celsius in the background, but I thought I'd just mention it anyway because it has had a bit of a decent rally recently. But yeah, that's the video for today, guys. Hope you enjoyed it. Stay patient. You'll get the reward, especially on some of these stocks. Thanks for watching, and I'll see you all in a bit.